Friday evening bouncer that's come from the government, the latest quarterly GDP growth data that's coming in for the second quarter, July-September quarter. GDP growth is at about 5.4%. That's what the government is saying. That is much lower than the 6.5% estimate that was already there from economists. Not only that, this is the lowest GDP growth number in 7 quarters, and that's why this data is very, very important to sort of cut and slice and try and understand what's actually happening behind the picture. And that's why we're calling this the Q2 GDP shocker. Now, in the graphics that are going to come up on the wall behind us, we're going to talk about what exactly happened here. July-September GDP growth has slowed to 5.4%. This is the slowest in 7 quarters, as we already mentioned. We have also seen that 6.5% was the estimate by economists. That has not been met. In fact, it's far away from that. It's also far away from what the RBI estimated for the second quarter, which was 7% GDP growth for this financial year, second quarter of this financial year. It's much lower than that. Now, what exactly happened behind the scenes? There are 4 key reasons why exactly this growth number have not been met. And I'll throw to my colleague Pallavi to try and explain to us what these 4 reasons are. Pallavi.
Right. So like you've mentioned, the number is substantially lower, not just from the Bloomberg poll of economist estimates, but it's also even lower than what the RBI was targeting, which throws up the big question regarding whether we're able to now meet the full year forecast, which was at 7.2%. That was already a fairly lofty target or a fairly lofty estimate, according to economists. And given the Q2 shocker of sorts, that sort of puts that number into even greater jeopardy, because it's very unlikely that we're now going to be able to meet that figure for the full year. A lot of economists have already begun revising their full year forecasts, and they're closer to anywhere between about 6.5% to 7% now for the full year. Like you've mentioned, multiple reasons for this weaker than anticipated figure. The key disappointment was definitely from industrial GVA. So construction, utilities, and manufacturing, of course, which came in at 2.2%, substantially lower than what we saw in the same quarter a year ago, and also significantly lower than what it was in Q1. Of course, partly because of the seasonality, Q2 did see an extended southwest monsoon. But even factoring in that, the figure is lower, and it remains to be seen whether we're able to make up in manufacturing GVA going forward. Construction, again, critical also, Vishwanath, because construction has been one of the key drivers of employment in the last several years, especially post-pandemic in the economy. And a lower than anticipated construction figure also throws up questions regarding employment prospects for a very large number of people who were finding work of some sorts in that space. So it is important for that sector to continue to grow at a strong pace. The last quarter, of course, we saw double-digit growth in construction. Agriculture was, of course, better than expected from Q1, and services was broadly holding up. But of course, on industrial GVA, it's more of a wait-and-watch mode for now. In terms of expenditure side trends also, while we have seen mixed indicators from urban as well as rural demand, with rural demand showing some sorts of recovery. Urban consumption was, of course, iffy in Q2. That has shown up in the numbers as well. Whether that's recovering or not is something we're still watching out for.
Right. Pallavi, you mentioned urban consumption, that there is an expectation that with better than expected sort of crop in the second half of the financial year, you will see that improving. Rural demand, as Pallavi said, is holding strong. There's also this festive season as well as wedding season sort of push to demand that is coming in towards the end of the financial year, which is hopefully going to push up the growth number. But as Pallavi said, the 7.2% number that the RBI has seems a little suspect right now. The CEA mentioned that this might be too soon to sort of expect that. But let's see what happens in the next 2 quarters. But that's the Q2 GDP shocker for you. Thank you so much for watching NDTV Profit. Stay tuned.